Hey, Andrew here from The Investor's Way, and welcome to Woody's Weekly Wisdom, episode number 52. And we're looking today at this headline that says, Pay rises Australians need to tackle the rising cost of living. So there wasn't a lot of news around today, and when I was preparing this video, but this one I thought was worthy of having a look at, because what we're looking at here in particular is an analysis of what type of pay rise you need in order to keep step with the rising cost of living that we've been experiencing. And so on Wednesday of this week, we had some CPI data come out, and it was a little bit higher than what they had been hoping for. The annual rate still came down because obviously 12 months ago things were rising at a more rapid rate than this particular month. But the consumer price index rose by 1% for the first 3 months of 2024, which was higher than the 0.8 that they were expecting, and it was higher than the previous quarter in December, where it was only 0.6. So the initial part of this story or headline is that has put a real dampener on the possibility of interest rate cuts this year, because if we can't get that annualized rate, which is now at 3.6, if we can't get that below 3%, then highly unlikely we're going to see interest rate cuts in the short term. So I guess that's the real bad news that's come from this data. But then this story is less about the bad news and more, well, it's also bad news, I think, for a lot of people when you see what's the result of these increases, not necessarily in relation to interest rates. But there's a table here where it says, well, if inflation is going up at this rate, and therefore prices are rising at this rate, and what we're probably seeing and you're probably experiencing is that prices in some areas are rising much more than 3.6%. There is a little bit of gouging going on. But what this table shows you is that if you're trying to keep up with inflation at the moment, your pay needs to be going up by the numbers in this table. So for someone on 70,000, it needs to go up by 2,500. That's your wage needs to go up by that amount. Somebody on 150,000 needs to go up by 5,400. And so I highly suspect that you're not necessarily seeing those types of increases from your employer. And so in order to keep up with inflation, you've got to find this money in other ways. And interestingly enough, we filmed some new episodes of Investment Insights yesterday, and just put a quick plug in there for the TV show. If you haven't watched it yet, check it out on the Ticker Network. But we did an episode on side hustles, and there's more and more people having to look at a side hustle in order to generate extra income to keep up with the cost of inflation, or try and get ahead of it in some way. But this is a very telling table, and I guess if you're on a wage and you're not seeing these increases, then you're absolutely feeling the pain that's coming from inflation and the rising cost of living. So that was the predominant part of the first half of this article about what you need in increased income to meet the rising costs of living. And then it just goes into a whole host of stuff about what workers are expecting when it comes to certain benefits attached to the new way of life when it comes to working. So working from home or even commuting back to work post the pandemic. So what this article is saying is that more and more employees are expecting that there are some form of allowance, either for the commute to work, to be in the office, or to work from home. So this is a really interesting thing, that something that in the past people may have taken for granted or just accepted was the way of life, and that was commuting to an office, maybe to the city, or just commuting to work and having to fund the cost of doing that. Now people are saying, well, if you want me to come back to work, I want some form of compensation, given the rising costs of living and so forth. And so that's a very interesting take on ways people are trying to manage in this higher cost of living environment that we are in. So really interesting to see the way people are being proactive in trying to manage their cost of living experience, and how employers are having to meet those expectations and requests when they're probably not able to meet them by providing increased salaries or wages or hourly rates, whichever you might be on. So there's the request for compensation for the commute, or there's a request for compensation for having to set up appropriate working arrangements for working from home. So that's really interesting to see that that's becoming more and more prevalent and expected by employees to accommodate what the employer wants from them. A rising cost of living arrangement or environment, as I said, and where they can't meet it by increasing the wages. So that's interesting, and it will be something to keep an eye on as time goes on to see if these things become normalised over a period of time, which is normally what happens, but we'll just have to keep an eye on that. So the main part, as I said, of this article was to acknowledge that the CPI data wasn't as good as we were hoping, and as a result, there is some lower expectations of interest rates dropping in the next, in 2024 at least. I won't say in the next 12 months because it's possible it could happen inside the next 12 months, but certainly 2024 is looking less likely now for interest rate cuts unless something dramatically changes in the next quarter, which is always possible, but it just looks a little unlikely at the moment. So what does that mean for your money and your wealth? And so the first thing I would say to you is look at ways that you can close this gap. So if you can't get a wage rise or an increase in your salary from your employer, there's options like side hustles, like I mentioned before, but then there's other options where maybe you have to just look at different ways you can cut your costs. So maybe make a phone call to the bank and ask them to do something about your interest rate. We still are in a reasonably competitive environment, so give them a call, see what they'll do, and see if you can shave something from your interest rate. And if you can't, and you're in a position to do something, maybe see whether or not you can change banks. Maybe get them competing with each other to see who can offer you the best deal and try and claw back some of this inflationary impact on your day-to-day living expenses. But ultimately, the main thing that I wanted to get out of this article is we may need to cool the jets when it comes to expectations for interest rate cuts this year. So therefore, we've got to look at other ways that we can manage the spiraling cost of living impact on our day-to-day living, and have a look at some of the options you have there. So like I said, side hustles, phoning the bank, looking for better deals. Look at better deals when it comes to things like electricity, gas, health insurance, car insurance. Just have a look at all of your expenses and see what you can do to rein them in a little bit, particularly, like I said, because there are a number of businesses out there that are potentially taking advantage of this cost of living crisis and increasing their prices by more than the inflationary impact. And so there's competition out there, and there's capacity to take on these companies if you are prepared to put in a little bit of time to improve your scenario. So that's my thoughts on this one. Don't need to necessarily pull this one apart. It's more a reasonably factual article, but this table in particular, I'll leave that as the final screen that we see. It is a very telling piece of data to say this is what the gap is that you need to be trying to fill, and I encourage you to find some ways to go about doing that. And as I always say on Woody's Weekly Wisdom, if you're watching on YouTube, click the little bell that's up there and maybe the subscribe button that might be just there, so that we can grow our audience and therefore more and more people get to see these weekly videos. And if you're watching on Facebook or LinkedIn, smash those share, like and comment buttons. share it to your audience. Leave us a comment. Let us know what you think. Maybe tell us what you're doing to close the gap when it comes to the rising cost of living. And let's continue the journey to secure and grow your money and wealth. And if you're ready to have a conversation about how can you change your financial future, always send us a DM, leave us a comment that you want us to be in contact with you, whatever it takes. Send the courier pigeon, whatever way you want to get in touch with us. Let's make it happen, and let's have you on the path to a brighter financial future. So that's Woody's Weekly Wisdom, episode 52 for this week. Have a great week. We'll see you again next week, and make it a good money week. Cheers.